Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial conditions.
Oliver Sloup with Blue Line Futures in very warm Chicago. I bet there's been no snow to play with at all.
I think we got a little flurry, but man, it is cold out there. You're seeing some of these commodity markets react. Looking at natural gas, that's one of the biggest movers of the day. Typically, we start with the grains, but let's look at natural gas. We've doubled in price in the last 10 days there, $3 to $6. $6.41, I think, was the high overnight. So a lot of volatility in those markets. And then other markets that are on the move, silver up another 10% today. And then you move over to the grain markets, and you're like, man, what a dud, especially after last week's impressive end of the week. A good close on Friday for corn, soybeans, and wheat, but the lack of follow-through continues to just be the theme, the ongoing theme in the grain markets. We get a positive session and then really can't get any additional momentum. Hopefully, we're working into a time of year where we can start to see that change as we inch slightly closer to spring and we can get some premium back in these markets. But all in all, not a whole lot to write home about in these grain markets. Looking at some big technical levels for corn, 434 to 435 in that March contract. That's going to be the big hurdle to get out above to really change the technical landscape. Until then, I think the bears have the technical advantage. But if we can see consecutive closes out above there, potentially we see more, not just relief, but more momentum to carry us a little bit higher into the springtime.
Okay, Oliver, let's keep the conversation going on the row crop side, but what about beans? Really, beans have been led higher by what's happened over in bean oil.
Yeah, nice bean oil-led rally. Again, we saw positive price action even in the overnight trade with the soybean market, but kind of coming off those highs, which isn't great to see, but all in all, you zoom out, we're still trading at pretty decent levels, especially considering where we were just a couple of weeks ago. We're still above the pre-WASDE report highs, so we need to hold on to these levels that we're at right now. They're 1068.5. That's the 200-day moving average. If we can get some closes out above there, I think potentially that opens the door for some additional technical momentum to carry us higher. Obviously, a lot of attention on South American weather right now. Agri came out earlier today. They increased production estimates for corn and soybeans. So that probably put a little bit of a headwind in the nice price action that we had. But all in all, no damage done yet to start the week. Hopefully we can hold our own and work back higher like some of those other commodity markets.
All right, Oliver, hang on. Quick break here. We'll come back and talk cattle on feed. 77. Let's bring him back in. Oliver Sloup, Blue Line Futures. Let's start with that cattle on feed. No surprises, were there?
No surprises, pretty much within the range of expectation. So you're seeing the market kind of trade on its own merit to start this week's trade. We saw some volatility in some of the outside markets. Equities opened up sharply lower last night, since rebounded. I think that's offered a little bit of a tailwind in the market as well. And then just kind of looking pre-cattle on feed report price action on Friday, we saw the lower trade initially in the early morning trade, but held that 100-day moving average very, very well. And I think that a lot of that was fundamentally driven when we got some good rumors of cash trade starting to develop and on the firmer side down in the south. So that propped us back up, and now we're just right back towards the top end of the recent range. So looking at that April live cattle market, you're looking at 238, 240, and you and I have talked about this previously. I think we're probably in a little bit of a range-bound market, and this 238, 240 level probably going to be the upper end of that unless we do get a new catalyst to break us out to the upside. So if you've got physical risk, I think this is probably a decent opportunity to look at laying some of that off.
Okay, and then hogs, we've seen the deferred contracts taking off. Positive sign?
Yeah, June hogs have been up in a way. 110 was a level that we had kind of outlined with our clients over the last month and a half as an upside target potential. We basically got there in today's trade and even on Friday's trade as well. So I think how much juice is left in this grave? I don't think a whole lot. So if you've been long the market or, again, need to hedge the downside, I think this is an excellent spot to do so. I wouldn't be surprised to see the bull market continue over time. But in the short term, seems like we may have gone a little bit too far too fast. And this is a market that probably it would be healthy to see a little bit of a correction and the market catch its breath in the near term.
Oliver, you're always full of information. Always great to visit with you. Before you go, very cold day, cup of hot cocoa, cup of hot coffee. Which one?
About 3 pots of hot coffee.
All right. We'll remember that. I'll put the coffee on for you here. Again, Oliver Sloup is with Blue Line Futures.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including the specific material used and distributed by Blue Line Futures LLC, shall be construed as or is in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.